Welcome to This Explainer. If you've ever sat in front of glowing screens, watching those volatile crypto charts late into the night, you definitely know the feeling. The market moves, and you react. But what if behind all those flickering candles, there's an unseen reality playing out? Today, we're diving into a pretty dark psychological journey. It's the story of an everyday American trader who slowly starts to realize that they aren't just participating in the market, they're actually being trapped by it. Picture this for a second. You make a move and bam, the market immediately whips against you. Now at first, it just feels like bad luck, right? Just a fluke. But what if it's not? What if there's actually an invisible system guiding every single spike and every crash? What if the market isn't just this chaotic ocean, but a carefully constructed snare?
Section 1. The perfect setup and the illusion of control.
So, imagine our trader. They're sitting in a dimly lit room, bathed in that cold blue glow of the monitors. They're scanning through these crazy crypto charts, and suddenly, there it is. Their internal monologue just kicks in. This looks perfect. They see a clean breakout, strong momentum, swelling volume. Literally every indicator is screaming one word at them: buy. So with total conviction, they click the button and they enter the trade. And you know what? For a brief, beautiful moment, it actually works. The price moves exactly as they predicted. That early profit rolls in, confidence starts building up, and man, that dopamine hits. The trader leans back in their chair thinking, I nailed it. I finally cracked the code.
Which brings us to Section 2, the sudden shift, or when momentum dies.
But then almost instantly, the air in the room changes. That rapid upward momentum just stutters, and then it completely stops. Out of nowhere, there's this sudden, violent reversal. It was a fake breakout. The price plummets, pinpointing the exact level of the trader's stop loss. It just wipes them out. And the craziest part, the literal second they are forced out of the trade, the price reverses and climbs right back up.
The trader just stares at the screen, totally stunned. Why did it reverse? The setup was textbook. The indicators were all perfectly aligned. It's like the screen is almost glitching, just mocking them. It's this moment of profound, gut-wrenching betrayal by the numbers.
Now we enter Section 3, the endless loop. Getting trapped.
This right here is where logic gets completely thrown out the window. Because the trader doesn't just step away. Instead, this mechanical, repetitive loop lures them right back in. Let's break it down. Step 1, another setup appears. Step 2, they make another confident entry, mostly driven by this desperate need to recover that initial loss. And Step 3, another brutal failure. The market punishes them in the exact same way. It's a vicious cycle that just feeds on impatience. So now, they're truly stuck. A new entry immediately starts bleeding red, but this time, they refuse to hit the stop loss. They tell themselves, I'll wait, it'll come back. It's such a dangerous rationalization, right? Just staring at a bleeding screen, waiting for a bounce that is never gonna come. They're just sinking deeper and deeper. And then comes the complete loss of control. Just one more trade. They exit, they re-enter. They're moving faster now, breathing heavier. There's way less thinking and way more reacting. Buy, sell, buy, sell. They're frantically clawing to escape, but every single click just pulls them deeper into the quicksand. If you track this, you can actually watch the rapid emotional decline happen in phases. It begins with Phase 1, confidence. But when that first trade fails, Phase 2, doubt, creeps in. That quickly twists into Phase 3, confusion. Then comes anxiety as those losses mount up, followed by Phase 5, panic during all that frantic revenge trading. And finally, paranoia. Every single entry is instantly punished. Every exit is mistimed. It starts to feel like the UI itself is watching them, like the market actually knows they are sitting right there.
Which leads to Section 4, the final truth, the system revealed.
Finally, the frantic clicking stops. The trader takes a long step back. The haze of panic parts just enough for this really chilling realization: this doesn't make sense. They look back at the historical data and they see the loops, the traps, all of it playing out over and over again, perfectly designed to catch human psychology at its absolute breaking point. The real tragedy here isn't even losing the money, it's realizing that the game was rigged all along.
Because they're not accidents, they're reactions. Those breakouts that lured them in, the sudden reversals that crushed them, the perfectly timed losses, absolutely none of it was random. The market wasn't acting chaotic at all. Actually, scratch that. It's more like it was reacting, mathematically, to predictable human behavior.
So here is the brutal reality of this market mechanism. It doesn't hunt you, it doesn't chase you down, it literally just waits. It sits there patiently for you to make the exact same emotional mistake. And it repeats again and again. It continues until you completely lose control and just hand over your capital. It's an algorithm built entirely on human despair.
As we wrap up this explainer today, I want to leave you with this thought. The next time you sit in the dark, stare at a chart, and think to yourself, man, this looks perfect, really ask yourself who is actually in control. Is it genuinely a flawless setup, or is it just a trap you don't even see? Keep your eyes open, folks, and never let the screen dictate your reality.